इतना सा फर्क है एक बार सोच के छोड़ देने में और लग के कर दिखाने में। मान लेने में कि जिंदगी ऐसे ही कटेगी और सुबह 4 बजे उठ के सोचने में कि अभी तो बस शुरुआत है। किसी मैगजीन को हाथ में लेने में और उसी मैगजीन के कवर पेज पे होने में इतना सा ही तो फर्क है। वीआईपी सीट में और उसकी पिछली सीट में इतना सा ही तो फर्क है। वो जिसका मैदान ही खुला आसमान है, वही कल जमीन पर तो था। पूछोगे तो बताएगा वो पंछी कि एक दायरे में सिमटने में और पूरी दुनिया को दायरा बनाने में बस इतना सा फर्क है। इतना कितना है? इतना है या इतना है? जो नापेगा वो जाने कि जहां धरती और आसमान मिलते हैं, नानकुर से दूर, अगर मगर शायद से दूर, वहां भी दोनों में फर्क बस इतना सा है। धरती और 7वें आसमान में फर्क बस इतना सा है। ये एक अंतर प्रेरणा है। ये हमारी, आपकी, हम सब की अंतर प्रेरणा है। एक कदम, एक छलांग, एक बाजी, एक गहरी सांस और एक ललकार खुली हवाओं में कि हाँ, मैं बना हूं उन फिजाओं के लिए, कि हाँ, मैं बना हूं उन ऊंचाइयों के लिए जो ऊंची तो बहुत हैं पर नामुमकिन भी नहीं, क्योंकि मुमकिन और नामुमकिन में बस इतना सा फर्क है। धूप छांव में फर्क बस इतना सा है। तो बस चलिए फ्रेंचाइज इंडिया के साथ ये फर्क मिटा देते हैं। फ्रेंचाइज इंडिया, 20 years of ideas.
Thank you, friends. Very good morning to all of you. I welcome and thank you all for coming on this Investor Advantage webinar or session that we do every Thursday. I'm Sonia Chaudhary, MD Franchise India. And friends, this session is all about, starting your own business. And I would like to start this particular session with a big thank you. And, as we start a new financial year this month, I wanted to take this platform as an opportunity to thank all our investors, business buyer, aspiring, entrepreneurs, patrons who have given us continuous support and I would say undated support. Even the last 2 years, which was difficult for the industry, we were able to, last and sustain because of the support that we have got and rather overwhelming support and response that we got on the webinar and otherwise on the digital platform that we do at 12 o'clock, the business opportunity show. So we bring every day new opportunities. And I would also like to share with you that this year for Franchise India was also great. And this year alone, I like to share some of the achievements. And that was because the support that we received from all of you. We were able to reach, a very big set of new aspirant, business buyer at Franchise India. We have more than 1 lakh inquiries, I would say, people who reach out to us, who are looking at various business opportunities. And over these 25 years, this has only grown. And the last year, we were able to reach out to more than 12,37,000 business buyers like yourself. And we were also instrumental in actually helping nearly 1,300 plus business buyers who bought Franchise India services and decided to buy businesses based on their investment area, requirement, interest. And overall, as a company, we were able to cross a gross transactional value of more than 960 crores, which means 960 crores was the investment that we were able to get through more than 1,300 business buyers who bought these businesses through us. So which means that 960 crore was the investment in nearly 1,300 plus businesses, that we were able to get. And having said that, there is also, a few thousand investors who might have not taken directly our services, but they were part of our exhibitions that we did. And a lot of you even come on the website of Franchise India where you interact with the brand directly. And that number is also nearly 5,000 more and beyond. and nearly 781 companies that we were able to onboard in this year. And these opportunities that we launched across all industries and sectors. And one thing which I would also like to mention that, every time we do these webinars, we also do these physical events. We also get a lot of learning from all our investors, business buyers like you, who come up with their requirements. And at Franchise India, we focus on businesses, or I would say brands, where we see the overall consumption going and what currently the market is demanding. And based on that, I also felt if I can maybe summarize some of the industries which would be the highlight, for the year 2022 and 23. And maybe by the end of the year, we might have some new industries or categories that might come. But these are some industries that we saw a very big demand. And some of these industries, we saw the starting in the last year. And so I'll take you through some of the industries, and I'll also request friends, if you have interest in any of these industries, please let us know. And as usual, I like to mention that I want you all to make this webinar very, very interactive. So any questions that you have, and this webinar is not about me or the company. This is all about you. And as a start your own business specialist, we work with every business buyer and handhold them through the entire process of buying a business. So friends, keep writing in the Q&A box, and I'll take you through these 11 industries. And before I do that, I want to do maybe a small, warm-up exercise where I will request all of you to put your interest area, your city where you come from, or the location that you're looking for starting a business. And most importantly, I would like to know how many of you are looking at starting a business with a defined timeline, where you have a timeline in the back of your mind and you say, I want to start the business in 15 days or 25 days, or say a month or a 3-month time or a 6-month time or a 12-month time. So how many of you already have a timeline in your mind and you're looking at starting a business? I'll request all of you, please go in the Q&A box and write what is a timeline in your mind that you want to start the business in. And second, if you have a specific interest in an industry or a brand, you please go ahead and put that in the Q&A box along with the city of your interest. So keep writing in, friends. I'll also read out your interest, and there's anything specific that you want to know, please write that. I will also be able to read that from the Q&A box. So welcome, Prakashi. I see your response, the first response which I see coming from you. And you are a working professional in the IT industry and you're looking for starting a business in Udaipur in the next 6 months' time. Absolutely, Prakashi, we would be happy to work with you. And I also have, friends, I would like to add, at Franchise India, we have a big distribution across India. When I say distribution, we have our direct team. I have channel partners across 97 cities in the country. So most of the locations you would write for, I would already have my local team or my local partners who work, and they work very personalized based on what you need. So, and I would be happy to share details, and these team members can connect with you and you can meet with them to explore and brainstorm what you need. So welcome, Mr. Baba. You're looking for something in F&B, and F&B again is, very broad category, and we would be able to help you. And we work across all segments from cloud kitchen to QSR to fine dining, bar, lounges. So a very broad spectrum of all categories in the F&B that we work with. And we have Santosh Rathiji. Welcome, Santoshi. You're looking for starting a business in 1 to 2 years time. You're from Raipur, and I have a local partner in Raipur, and he would be able to even meet you if you wish to. Aksharji, welcome. You're looking at starting something immediately, 3 months, Lucknow, and I work very closely because we are headquartered in Delhi, while we have offices all across the country. I'm based out of Delhi, and a lot of our investors even come from Lucknow for a lot of events that I do in Delhi. And this category F&B is interesting, and we work not only with the Indian brands at Franchise India, we also work with many international brands where we've got these international brands to the Indian market. So friends, if you're looking at something in the master franchisee, also looking at a bigger investment, looking at owning the entire area or region and sub-franchising, you can let us know. We would also be able to help you out. We have a separate company which is Fran Global, which works with international brands to come to Indian territory. And as a company, we have been instrumental in bringing more than 400 international brands to the land. So great. So we would be working with you, Akshay Manish ji, welcome from Vadodara. You want to start something there, and I have my office there in Vadodara. And Akshay ji, looking for something in the cloud kitchen. And if I know the location, we work with one of the leading chains in the country, which is the name in the cloud kitchen. And they have a very specific, city rollout. If you know the location, we would be absolutely able to help you. And having said that, there are many regional chains also that we work in the cloud kitchen segment. And typically, a cloud kitchen can start anything from, 10 lakh to about, 15, 18 lakhs of investment, depending on the format and number of brands under that roof. So, and cafe is also an option, and we definitely would look at that also, Akshay. Ankita Laji, welcome. You're currently working in a real estate company in Belgaum, which is a tier 2 city. My interest in franchising business in next 6 months to a year time. And you have knowledge in marketing sales, but you looking at investment, which should not be very high. Ankita ji, we can have a discussion. And if you're looking at something in the real estate structure, we also run at Franchise India, one of the leading real estate companies called Remax, which is the world's biggest franchise consulting brokerage company. And Franchise India is the partner for Remax in India. We currently run more than 200 location offices of Remax in the country. So Remax has a two structure, tier structure, where you can either become a franchisee of Remax with an investment of for a tier 2, anything between 10 to 11 lakhs is the investment. And the second option is to become an agent, with the company, which comes at relatively very small investment of say 25,000. You become an agent at one of the offices. So we can explore especially real estate possibilities. And Babaji, you're looking at something in Gaya, Bihar, and I have a very aggressive or I would say team which is working in Patna, and definitely we would help you reach out to them. So guys, keep writing in whatever your interest is, any questions that you have, and I like to make it interactive. Like I mentioned, this session is all about you and how Franchise India can work with you to help you take an informed decision of buying a business. So the industries which I wanted to talk about, and I'll give you a very quick snapshot of these industries, and I'm sure a lot of you out here might have heard about these industries, or might still be exploring some of these. And starting with electric vehicle, that's one of the industries or categories which has shown a very big I would say response in the last year, and this year would be very, very big for electric vehicles. And I'm saying electric vehicles both in terms of dealership as well as charging stations or swapping stations, so to say. And the last year alone, there were more than 25 plus companies that we launched, and as I speak, we have still more companies which are coming. So there are many OEMs who are into the business, and typically for a business like electric vehicle, you have three options or opportunities, which starts from a dealership, which can be two-wheeler, for example, can be the investment of maybe 35 to 50 odd lakhs starting, and then followed by maybe charging stations which can come, or swapping stations, so where the investment can range anything between 10 to 20, 25 odd lakhs. Even in this segment, you have option for both, taking a master franchisee or an area franchisee as well. So some of the leading companies that we work in this segment would be companies like Deltic. This is again a very old company based out of East India. They're more than 100-year-old company. They're looking at a two-wheeler dealership across the country, and a very great model which they have for their two-wheelers, which is they bring their top dealer, and this dealership would also support sub dealers under them. So reach out to us if you're keen on something on the electric vehicle, a category which is showing a very good response. Second, I would say, is edtech as industry. And when I say edtech, I would say not just cloud, but maybe a hybrid model, which brings in both the online and the offline structure together. And we happen to work with, again, some of the leading names in the edtech space, including Unacademy, Vedantu, and typically the investment in these two structures and the relationship to associate with companies like these, because they already have a very big online presence, and they're imparting entire education through online platforms. But now they're also looking at all that they were doing all directly through their digital platform and their direct marketing. But now they're also opened up to appointing partners in cities across India, where Unacademy is also appointing a master franchisee. So you can become a master franchisee of Unacademy in maybe Delhi, Bombay, Bangalore, any of the top locations, while Vedantu is offering only unit franchisee, where the investment for Unacademy would start anything from maybe 3.5, 4 lakhs for a unit franchisee, and depending on the city and the potential of that, the master franchise fee is determined. And same with the Vedantu charges anything upwards of 7 lakhs depending on the region that you take, and the partner gets some kind of commission structure on the overall acquisition of students that is done through that partner. So interesting models if you belong to some industry which is similar to this, and you think you want to do something like this, because these businesses do not require any infrastructure. So Unacademy, Vedantu does not require you to have any infrastructure. If you are in currently any business and you think this can be added or complementary business, you can even start that from your home. But absolutely, it requires a lot of networking with schools and to be able to onboard them, including coaching centers. Third, I would say is, F&B. I saw F&B, with a big response, and F&B is very popular and a favorite, all throughout. And I know, a lot of people who've got into F&B franchising never came with experience, and that's the irony. Nobody has ever come with any experience in F&B, and most of them are first-time business buyer. And this is one category which has shown tremendous response, even in the pandemic. Apart from the 1-2 months where the interest comparatively, went down because of the shutdown of markets, but this category is something which is again getting a huge response. And one format, which I would say has started getting traction, which was missing, I would say, in the first half of the last year, was bars, lounges, and I would say formats like quick service restaurants, which have a liquor option along with them. So that is something which is becoming very attractive. And comparatively, if I look at cafe lounges, which has a liquor option, these kind of investment starts anything between upwards of about 45 odd lakhs. And when I say liquor, and many of these companies do only beer and wine license, which comparatively comes with lesser regulations. And then we have bars, or I would say, which comparatively would be higher investment, starting upwards of 1.4 or 5 odd crores. Companies like 10 Downing Street, which is a name to reckon with. It's a Hyderabad-based company. They have been operating in a lot of locations in South and also in Pune. So formats like would do well. And then I would also add specialty retail. This is one category which is again becoming more specialized, and a lot of new, I would say, companies and categories have come in specialty retail. And one such category which has been very, very unorganized in specialty retail would be a company which we launched about 10 days back. And this company is called JSW. They are one of the leading names in the country, the biggest business house, one of the leading business houses. And they have interest in, cement and other businesses, including aviation. And so they've come up with a format called JSW One Homes, where currently they've already launched one outlet in Coimbatore, and their current focus markets include Trichy, Salem, Hyderabad, and they give complete construction solutions for home, and very attractive, very high margin business where the entire fulfillment is done along with the company. So the company treats you like a partner, where they also share leads with you and you work with them to onboard clients. And it does not require any infrastructure. You only need to put maybe some kind of inventory for display, but all that which is supplied is real-time inventory, which the company supplies every time we bring a brand on board. And some other brands I would even take, for maybe some fashion and footwear companies like Sports Station, which is again a multi-brand outlet, which has brands like Nike, Puma, Skechers, all under one roof. Or maybe brands like Hush Puppies, Bata, they all come under specialty retail. And also personal care, which is becoming a very, very big category in the country. We launched a company called Sensuals, and this happens to be the only brand in India which is the first celebrity beauty store, which comes with a lower investment comparatively, because this is a personal care product where all the celebrity owned brands, I'm not saying endorsed brand, but owned brands are on this portal, on this format, including celebrities like Salman Khan, Tiger Shroff, Lara Datta, Virat Kohli, Sunny Leone. They have the entire personal care line, which includes your cosmetics, skin care, hair care products, and starts with an investment which is as small as 10 to 12 odd lakhs and 200 square feet, 80 square feet, kind of a format. Very, very scalable model, and works very well, especially in tier 2 and 3 locations, because there's a very big aspirational the population which sits in these cities. And similarly, it would also be specialty retail, like companies like Organic World, which is a brand from Bangalore, and they have a big SKUs in their category, and they've also backward integrated, so which means they have all organic products which we use at our homes, and comparatively good margins, because most of the companies who do organic would work on a very small SKU, and they have a huge SKU, right? I think there are more than 300 plus SKUs the company has, and because they are backward integrated, they're able to give a better margin also to their partners. So currently their focus is in Bangalore. They already run stores in some of the most prime locations in Bangalore, including Hyderabad and Chennai, where the company wants to go. Then I would also say logistics, and logistics has been a favorite always, but the companies which are engaged in last mile delivery partners. So that is something that would again see a big response in this year, including quick commerce, which is, hyper local delivery, which you see a lot of these companies like Blinkit and all that being done. We have partners who do that. So quick commerce is something which is also gaining a very big momentum, and it will see a very big tipping point in this year. Then we also have direct to home services. When I say direct to home services, these could be businesses like your laundry services, your beauty services also. And today, when you look at a lot of companies who have actually disrupted their, businesses are companies which are providing these services which are at home. And one example I like to give, again, a Bangalore based company, which is a company called Celebrate Life. And they changed their business model in the pandemic. They used to run these big salons earlier, but in the pandemic, they kind of rationalized their business model, made a very small investment model of 10 lakh investment, but they were only looking at locations which are not on high street, no malls, no high street, no high rentals, but locations which had high captive audience, where my audience was present. And if you are from Bangalore, the brand, you can even check some of the locations which they run are highly profitable, where you can start your salon with 10 lakhs of investment, and all their locations are inside the apartment complexes. So which means your rentals is not very high, and rental forms a very big, component when we talk about, businesses like beauty services, like even salon, where almost 15-20% of your revenue that you make goes towards the rental. And Celebrate Home has some locations which are as small as 10,000 rental, or they would do on a revenue share. So when you have a low rental locations, your margins become very, very attractive. So even with the business of 3 lakhs, one can easily take home anything between 1 to 1.5 lakh every month home, because your operating costs are very low. So direct to home services are something which are big on the year as a demand. And then would also be knowledge-based businesses. And when I say knowledge-based businesses, these are companies which, for example, would be training companies, coaching companies, and a lot of entrepreneurs who want to take these kind of businesses are people who are mid-management to senior management, working in companies. And when they retire or they look at changing a career, they would not want to run something which is not knowledge based. Rather, they want to put the years of experience together to run that business. So companies like coaching, and we work with some of the biggest companies like Action Coach, which is the biggest company in the world, and Franchise India manages, and rather we are the master franchisee for Action Coach for entire India and Gulf. So these businesses would do very well. And second, I would also say, knowledge based would also be, and being Franchise India, we believe in franchising. There's also an opportunity for everybody to also become a channel partner of Franchise India. Today, I have a very large presence, while my top city presence is there through my direct offices, but I have a very large presence which is in tier 2 and tier 3 locations, which is I would say broadly or largely through my IFC channel business. And these are my partners who understand the demographics, who know these cities, and they're able to bring that local connect. And this investment is again very small, and most of the knowledge-based business start very small in investment, because these businesses give you return not on the investment that you make, but they give you return on the time that you put, right? So if you become a partner, for example, with Franchise India, we need more of your time, because it does not come with any investment. You don't have to put up an office, but you need to have a lot of time available, a very small investment of 4 lakhs that you start and become. Healthcare is another, category which is always a sunrise industry. And I would add, so pharmacy was the flavor. And I remember when we started, the pandemic, when it started, we had a big demand for generic medicines, low investment, 8-10 lakhs. And now that still continues, and we have seen a lot of pharmacy chains, coming all across. But most of these pharmacy chains are regional, so we have maybe Bombay-based chain expanding largely in Maharashtra, or a Delhi-based chain expanding largely here, or a South-based chain, largely expanding there. But we also have some of the national chains looking all across. So pharma being one of the categories, and equally, I would say specialty clinics, which are also gaining a lot of momentum. And these are not polyclinic, but specialty clinics, which would specialize in curing, specific ailments. So, for example, there's a company called Ansi Wellness in Bombay. They are a leading non-surgical, spine care center. Then there's a company called VScan, Bangalore-based. They have locations in Hyderabad, Bangalore, Chennai, Delhi, Bombay, all across. And this company has been running their company-owned diagnostic centers. But these are not the regular, diagnostic centers. They only focus on dental diagnostic, and a very good margin business. Not too much of operating cost that you have in this category again. And lastly, I would say MRO services, which is maintenance, repair, auto repair service, or overall, after market services. And there are companies today which are expanding, looking. So I think a couple of days back, we launched a company called Servicey, which was comparatively low investment business, but again, good margins. They're looking at partners all across. I was speaking to a brand today, and we work with this company, TVS. We're working with them for long. They have a very big, rollout for this year. They're looking at more than, maybe 3,000 odd locations they want to open pan India. So some of these opportunities would exist with us, and I will request all of you friends, and if you think there's any category that you still need more information on brands, as a company, we work with thousands of companies who are either getting into franchising or company outlets getting into, now a franchise model. So I would be more than happy to discuss any of these opportunities with you. And quickly, I will also take the next 15 minutes to, take you through a small presentation, which we do every time, because this session is about how you can start a business. And being the investor centric and we're a franchise focused company, we have worked with the business buyers in our last 24 years of our journey, and where we work with you to evaluate options based on your requirement. At the same time, we also give you a lot of knowledge and learning from the industry experts, which are platform of Franchise India, through our exhibitions, our event congress that we do, or conferences that we do. We bring that to you. And in these many years, while millions of, I would say, business buyers would have benefited and trusted our platform to research opportunities and finalize one. And this is a special webinar, where we are talking about, a product called Investor Advantage. And that means how an investor can be at advantage of, choosing and finalizing a business. And I've seen, every time we look at starting something, we are accosted with a lot of questions in our mind. What do we do? How do we start? Which industry is right? Is it right for me? Is the right time? I've seen a lot of people who, even after, finalizing on the opportunity, back out and say, oh, maybe I'm not too sure if I'm prepared for it or not, or, I can do it by myself. So I would take you through a small presentation that talks about, how you as a business buyer can equip yourself in selecting the right opportunity for you. So, and these are 5 assessment tools, that I'll talk about. If I can request, Kanika, we put that on the screen. So these are 5 assessment tools, friends, which we always advise our business buyers not to bypass any of them. And these typically would take care of everything that you want to, should, before you decide what brand you want to buy, whether your timeline is, 15 days or 1 year. And all this can be completed in that time frame. And so you can do it yourself. And if you need the advice, assistance, or guided solutions from Franchise India, we also work with you to guide you take this informed decision, where we evaluate the options. We work with you in the negotiation process, signing of the agreement. All that is something which becomes a part of our services. So these are 5 tools, self-assessment, industry, market assessment, peer, which is competition, and brand assessment. Finally, the brand that you've selected, what all you must know about the brand. And so what we did under these 5 assessment tools, we also created, subcategories and, created, on an average, 5 points each of these assessment tools. And next slide, please. So all these, 25 assessment, points become the base for anybody who wants to start or narrow down on an opportunity. And this is, to me, the most important aspect for any business buyer to select a brand, opportunity, industry. And if you do a quick, tick mark score, and which you can't do it now because there's a lot of working that you need to back end and research before you're able to even tick mark on this. But if you have a score of 20 plus on this 25 scoreboard, the opportunity selected is excellent. If you have a score of 15 to 20, it is good. But if your score is anything less than 15, we do not advise you to go ahead on that opportunity. And there could be a misfit. Maybe the brand is not right, maybe the market is not right, and maybe it does not go well with the industry and the market. Sometimes some industries or categories are new and they're not prepared for entering certain markets, so there could be some wrong combinations. So if you do this assessment, by large, what you would choose would have a high probability of success. And very quickly I'll tell you on each of these. So and starting with the self-assessment, and to me, everything that we want to do in our life starts with ourself. When I say self, it also includes my inner circle, my family, maybe my children, my spouse, whom we actually want to have some goals and we want to reach and have these goals reached out. So this is the most aspiring tool for any business buyer, where you have to evaluate traits like your own knowledge level, your skills, your experience. I'm not saying experience in running a business, because India has nearly 35% of business buyers who come with zero experience in franchising or zero experience of running a business. And that's the beauty of a business franchising, because it gives you all the technical know-how to run and operate. So business skills, if you have experience, it could be your education, your qualification, the knowledge base that you have. So all that becomes a part of, this self-assessment tool, where you have to look at, and there's a lot of self-actualization that one must do, which starts with alignment of 2 goals, because ultimately you're starting a business. but your business needs to have alignment with your goals in your life. So life goal and your business goals have to have alignment. So this is a self-discovery phase, and you need to find out what you like, what you're passionate about. But equally, this passion you like, and what you like needs to also collaborate with the business profitability. So no business will make ever sense, no matter how passionate I'm about something. But if that business does not make any economic sense, that will never keep us going. So we need to look at first and foremost your financial goal, and financial goal would mean that you need to align obviously your life goals and your business goals. But three things which become important when we look at financial goal is first and foremost timeline. What is the timeline for you to achieve your financial goal? That is the first paramount important criteria. And for all of us, this can be different. I can have a short-term goal, I can have a mid-term goal, I can have a long-term goal, and sometimes one investment alone cannot help us achieve that, which means I need to maybe put that investment into different businesses or different asset classes. So timeline is one goal that you must understand, what timeline you want to achieve that financial goal. Second is what risk you want to take, and third is the return that you expect. Now these three things are proportionate. There is nothing which can be done without understanding these three things. If I'm talking about risk, I need to understand what reward I get. Now if I look at investment in various asset classes, these asset classes fundamental goals are three. Whenever I'm looking at making an investment, I would look at either safety. I don't care what return I get, but I want to know whatever investments I'm making, I want these investments to be safe, right? Second could be I'm looking at my investment which has source of income, which has to at least cover up inflation and give me rewards. And the third is I'm looking at business which helps me in my growth or my goal that I want to achieve. Now when I say safety as my goal, I am also saying I'm looking at a business which comes with low risk. When I say low risk, it also means low return. There cannot be any business which says, oh, I'm looking at safety, I'm looking at zero risk and very high return. No business. I sometimes see comments where say, I don't want to take any risk, but I'm looking at very high returns. So there is no business you can ever get, where you have low returns and low risk and high returns. This equation would never work. So second is income. Income would mean I'm looking at moderate risk and moderate return is what I'm expecting. And last is growth. So anybody who's looking at a growth centric business will always carry some kind of risk. And when I say I'm taking a high risk, I'm also telling myself I am also looking at higher returns which should come to me as a part of that investment decision. So any decision on investment that you take, understand these three equations of timeline, return, and your risk that you're expecting, and all these three are proportionate to each other. Now, second is your capital, which is your assets, your liabilities. And here we say, don't take too much of loans and over leverage nahi karna chahiye, because typically your first 6 months are not that easy. While you can operationally break even, but you also require a lot of working capital to sustain in these 6 months. A lot of investment even goes back in the business and you need to keep that working capital. And if you have a big loan, that you've taken, your interest to your, EMI start from the very first month. So you have an added pressure of, retaining, sustaining, and also, paying off your loans. And sometimes your cost of capital becomes too high also for the business to sustain. So understand what your, and create a very good balance between aapke assets kya, liabilities kya, and then decide. Ideal ratio should be 75-25, 80-20. Take a lesser loan and maybe a higher equity that you bring in the business, because a lot of businesses fail because of lack of financial management in their businesses. Third is your time involvement, and that is one area which I would like to talk a little bit more. And that's because a lot of us, when we look at investment opportunities, I see people looking at businesses say, I want to look at a small investment, but I don't want to put my time. Or somebody says, I can put a larger investment, but not too much of time, little time, moderate time, not maybe full time. So the different requirements, but largely when we look at franchising, the fundamental reason why franchising started, not by us, but why franchising started in America was efficiency, where owner, maybe even companies like McDonald's, when I talk about franchising, this is one company which has become synonymous with franchising. They started franchising and expanding because they realized, they knew the system, they knew the processes, they have a lot of, know-how which they had, but still, if the efficiency has to be brought at, the unit level, there has to be involvement of an owner. And that is when, franchising started actually becoming very big, where a lot of owners, business owners, entrepreneurs came forward and say, I don't know the business, I don't know the processes, the system, the processes, so you work on the brand and I take care of everything which goes inside the outlet. So that's where time became very, very involvement. So largely any business that you would see would have a franchisee owned, franchisee operated model, where you would operate and own the business yourself. So when I say franchisee owned, franchisee operated, I'm also saying you get two kind of returns. You get return on the investment you make, plus you get return on the time that you put on the business. The other side of the business is that we call in our term is franchisee owned, company operated model. A lot of companies even do that kind of model, where the company takes care of operations and you are a passive investor in the business. But largely these kind of investments or involvement by the company comes in only for specific reasons, which you must understand why the company wants to run and be very sure about it. And any company who's giving an a business like a FOCO, you must also go deep into their stability, financial stability, how stable these companies are, because you're not on the driving seat yourself, somebody else are doing the business, and they're committing some kind of a revenue share to you or a minimum guarantee on the investment that you make. But why companies do that is something which is very important to know. The first and foremost reason why maybe an international brand would want to do is because their delivery is very sensitive. The last mile delivery experience which they want to give to the end consumer is very, very sensitive. So only the master franchisee is allowed to invest and operate. Maybe he's expected to operate in the business. So he would not let anybody operate the business. A lot of companies who are entering might look at your only investment, where you put the money and the entire operations involvement is done by the company. So that last mile experience is something which they can take care of, because a lot of sensitivities attached with the experience in the market. And for reason it does not go well, the company also runs a big risk of losing their market and eventually their market share. So that is one reason. Second, a lot of companies do it when their business operations are difficult, they are complex. And if I give you examples, it can be retail, and that's one of my favorite I give every time, is a company called Chroma, which is a Tata enterprise. They run in 200 plus locations across India. All company owned stores Tata has been running throughout ever since they launched Chroma. But last 1.5 years, they started a franchisee owned, company operated model, where a franchisee would invest, company takes care of operations, because of the format, which is large. They do about 8,000, 12,000 square feet of format, which has huge SQ, which is very difficult for any individual to understand and maybe operate. So sometimes the complexity is such where the company wants to take care of operations themselves. And third is where the company might be new to a certain market. Maybe I'm Delhi based company, I want to enter a new market, and they want to again create that experience for their clients, and they want to control the operations. And sometimes that is a strategy with company. So these are three reasons where most of the companies would look at a franchisee and company operated model, which again can be a combination of minimum guarantee or a revenue share, or either of the two, whichever is higher, is something which a franchise partner gets in return of the investment they do. And lastly, as we all say, and that's a old age we've always talked about not putting all our eggs in one basket. So any investments you have or anything that you do, always have a fallback plan that can help you in the time. Or and I remember the last 2 years were difficult for some industries, and largely all industries, but some it had a bigger impact. And we had a lot of people who came to us. He said, I was doing this business which might not do well for the next 4-5 months, but help me in getting something which is doing well. And some of the people were able to sustain because while that business shut for a couple of months, but they had another business that flourished during that time. So always have a fallback plan. Don't put your entire investment in one business. Even if you have a large investment to be made, divide that investment into maybe 2 or 3 investments, which can be some passive, some active, or a combination of two, as the situation is. Second is industry assessment, which is again very, very important. And every industry is unique. So you must understand what are the underlying forces which are working in the industry, how attractive is the industry overall, and which are the important factors or critical factors, which make a brand in that industry successful over the others, in that industry. Because the industry sometimes is great, but not every brand in that industry would be performing well. Right. So what you look at is the opportunity, how big the opportunity is, who are the players in the market. And if I look at that as a brand, can I have the first mover advantage opening in my city? That could be one way of looking at that. Second, which is important when choosing an industry, is this industry future fit or not? So which is growth prospect, is this industry going to have prospects in the next 5 years, 10 years, 15 years? And if the answer is yes, you should go ahead, because sometimes your prospects for immediate future. When I say immediate, it means 1 month, 2 months look very bleak. Maybe it might not look, but today all schools are open, all preschools are open, and there was a time when people were not investing. But today also, there's a big opportunity where the demand is very high for preschools, but we don't have a big, supply, and a lot of infrastructures which are lying idle, which were not running, and a lot of organized chains like Eurokids, we work very closely with them. They're converting all that into Eurokid school. So look at opportunities which have a big horizon, 5 year, 10 year, 15 year kind of a horizon. And then is your demand and supply. When you look at the industry selection, you must look at which are the companies in that industry, what is the current demand in the market, and if the current brands which are existing in that market are able to fill that gap or not. So sometimes there might be two things. One is there are enough brands, but the other could also be I have enough companies doing that, but there is a service gap, right? There could be service gap in terms of the quality of the service, which might be a lack. So it could be a gap in terms of the product, the quality of the product, or the demand in the market, and equally, in terms of the service aspect as well. So look at that. And lastly is innovation. And when I say innovation, only companies, which are adding innovation, creativity, and improving and making their business model dynamic to be relevant to their end customers are the only companies which are surviving. Any company which is not innovating a distinctive product or a solution for their end consumer will never survive. And that is the reason many companies, even in 100 years of their operation, they're still relevant to maybe the end consumer, while people who just came in and they just lost these 2 years would never have that capability to rise and come back, because they never had any innovative product which attracted their end consumers. Look at companies and understand what innovations they bring to the market to keep their customer engaged. And then is market assessment, which is again important. Not every market is right for that brand or that industry. So what you need to look at is obviously, I would say three things. Is this industry new? If industry nahi hai, aapko nahi lagta ki aapke business, your market is ready for that industry, or maybe there's a time for that industry to come in. But here also you can have the first mover advantage. Anybody who comes in first, can have a bigger advantage when they set up. And a lot of these companies even give you advantage. Specifically, if I talk about electric wheeler companies, a lot of these companies are giving a breather, so they would not appoint maybe another distributor or a dealer in the location, or they give you a bigger radius. So all that is something these companies also do. Second, what you need to look at is the business new? Sometimes the business is new, for a market, and so that could be another reason. And lastly, what you must also analyze, at what stage is the business is it at a startup stage? Is it at a growth stage? Is it at a stage which is already penetrated most of the markets and looking at very select markets to get in? So that's what you need to understand when you look at assessing your market, which is is the business new? Is the industry new for the market? And what stage the business is, and what the opportunity for these companies or brands lie for your market. Very, very important. And there are two things which I would like to highlight is location, and also I would say the regulations, because every industry has different regulations. Maybe a drug license, liquor license, Delhi ka alag hai, Karnataka state, AP Telangana, all these states would have different regulations. So understand what your state guidelines and your have to talk about these industries, and specifically EV also, every state guidelines, and there are different incentivizations which these companies do to promote electric vehicle in their respective states. So understand what regulations talk about and what benefit you can get out of these regulations. And also real estate is important for running any business. And today when we look at real estate, even for companies which might be cloud kitchen companies, we feel these cloud kitchens can be opened anywhere. I'm virtually operating, but I can be anywhere. It is not the case. Well, it might look like I'm working from cloud, but even for cloud kitchens, you need to be in locations which have a very dense neighborhood, because cloud kitchens come with a relatively lower investment, but unless you have big volumes coming from your central kitchen or your base kitchen, you can never make money. Your orders can be very small, but if you have big volumes, only then these locations or business operations are profitable. So again, you need to look at locations, look at hubs where cloud kitchens are already present. So the rule which goes in real estate, is follow your leader, or you fill the gap which is existing in the market. But I would say follow the leader is something which is tried and tested, and in most of the cases you will not go wrong when you follow somebody who's already existing in the market. and look at locations where the competition is not only present but doing their best. Their performance is best in those markets, so you have a large likelihood of making your business operation successful in these markets. And then is peer-to-peer, which is the competition assessment, where you obviously don't go ahead just look at one brand and say, I like this brand, I want to go ahead. Look at the other competition which is present. What advantage do I have over the other companies which are present in terms of margin, their reach, their performance, their support which they are giving to a company, their penetration in the market. So all that is something that you must also cushion the brand when you select one brand over the other. Understand if there's a barrier to entry, and barrier to entry can be tech challenges. A lot of cloud kitchen, because I'm seeing some of you interested in cloud kitchen. A lot of cloud kitchen companies failed the last 2 years because these were small companies operating some digi locations, and they started these kitchens. But today all the companies in food also, the ones which are biggest in the country and surviving and scaling are ones which have technology in place, and rest all would erode. So some businesses would have a barrier to entry, which means if I take a brand which has an edge of technology, maybe a regulation or a patent licensing requirement, I would have better chances of faring well in that particular business. And lastly is the brand that we're looking at. And I would talk about a couple of things here. When you look at a brand, there are a couple of things that you must understand apart from the other 4 assessments we talked about. And these things are important, and I urge every business buyer, irrespective, you get the information from a Franchise India portal, from my teams, from my offices, partners, irrespective of all that, you must all undertake your own due diligence as well alongside. So while at Franchise India, we equip you with a lot of information, we equip you with a lot of insights, but I would not tell you to go ahead and sign this brand blindly. You must also undertake your diligence and before you go ahead on signing the association with that company. So a couple of things which I always advise, when you look for a brand filtration. And one would be, what is the average success rate of their outlets? Some of these companies might not have outlets operating, because a lot of franchise outlets operating, because many of them are company-owned operations and they are franchising. For example, TVS is a company. They largely have their own company-owned locations, but they're all fairly doing well. Even if not franchising, companies do fairly well in their company-owned outlets also. So whatever the success rate of franchisee or company operations is very important. Second, you must also question and ask the franchise owner, if they have franchisees in their business model already operating, how many or I would say how long does a average franchise partner stay in the system? A lot of people conclude the 5-year, would not extend. Many of them would have been partners with the brand for 15-20 years also, and maybe 50-60 years also. A lot of businesses are passed from one generation to the other. A lot of franchisors also have multi-unit franchisee. Yesterday, I had a company from South India, and that's one of the leading salon chains by the name of Studio 7. And they run close to about 50 odd salons in South India, including TN, Karnataka, and down south. And he said, none of my franchisees are running only single. All my franchise partners have multiple locations. So, and that talks a big about, the company, the trust they have in the market, or the trust their franchisees have on the company. So all these, give you tips on, how the brand is. So that's very important. And I'll cover maybe 2 or 3 points from here, which largely I've covered even before. But 2-3 things which you must also understand is also the the operating cost, because operating cost sometimes in certain companies your initial cost might be low but operating expenses are higher. In certain cases your initial cost is high but your operating expenses are low. So understand what operating expenses you have, what kind of manpower is required, training given by the company, any reinvestment that you have to do, because a lot of time we also have to reinvest in the opportunity. For example, in case of Chroma, your agreements are signed for example 21 years. Now in these 21 years your infrastructure would also depreciate, and you also need to also do some kind of refurbishment in that infrastructure. Reinvestment can also be in the stock or the machinery that you need to keep in the center or the outlet. Reinvestment could also be in increasing the infrastructure in case of K-12 schools. So we launched a company, K-12 school, a couple of days back. And so the which is GD Goenka, they're looking primarily in East India. So their larger focus today is West Bengal, which they're focusing. Now K-12 schools would take their time to get ROI. You don't get an ROI for a K-12 in 1 year, 2 years time, because your horizon is big, because all these, and GD Goenka East specifically that we launched last time with Focus, your agreements are lifetime, because you don't want your schools to be shut, right? So if your horizon of investment is higher, your returns are, proportionate to there, right? But on an average, if you look at say a food or a cloud kitchen for that matter, or maybe a retail outlet, on an average, your term of the agreement is 5 years, and your ROI typically, comes in a span of, 3.5 years time frame. But projects like a K-12 take about, 7 to 8 years to break even, because every year you are investing in infrastructure also, because the school does not require you to put the entire infrastructure on day one of operations. Every year you progress on that. And also, as a franchise owner, because why we look at franchising is because we look at de-risking ourselves, understand, and especially, when we talk about franchise-owned company operated model, how the company is de-risking you. And this de-risking could be in terms of, giving a minimum guarantee, a revenue share, visibility on, what is happening at the outlet in case they're operating, what happens to the stock, in case the stock is not sold. So what liquidation policy the company has. So all that is something that you must understand before you finalize on the brand. And quickly, I'll take you on the next slide. Next slide, please. Next. So this is the process, friends, that we follow all across, and this is what we've been doing for more than 2.5 decades, where we work with every partner or subscriber or investor of Franchise India, where we take you through the very first stage, information stage, until the time you sign up with the brand. We handhold you through the entire process. So information stage is not sharing just brands, 10,000 companies listed on our website. You don't just get an access to that, but you also, it also means that you get insights on what is right, for you to choose. We evaluate that with you based on SOMF fit, which is your strategic fit, your experience, education, qualification, operational fit, which means the time that you have to put in the business, market fit, what businesses are right for your market and what businesses your market is, prepared to take. And lastly is financial fit, which is the investment you want to make, including the working capital outlay that you must have before finalizing the opportunity. So we work and evaluate businesses only based on these 4 fits, which typically takes into consideration almost everything. And then we participate in meetings, tri-party meetings, calls, physical meeting, tour of the center, outlet. All that is something which is facilitated and worked by our teams till the time you sign up a letter of intent and agreement with the brand. So through the entire stage and phases that we work with you, and this can take anything, between 15-20 days, depending on your urgency, to about maybe 3 months time. On an average, every investor that I have, worked with, if I take an average, people decide to buy a business anything between 45 to 60 days time. So if you want to buy a business, start a business in 3 months time, you have to start looking at opportunities, finalizing, because if you finalize today, it will still take you a month and a half to even, get your first launch done. So this is the process, that we follow throughout. And what you get as a, investor advantage, investor advantage subscriber with Franchise India, you get a 1 hour of evaluation, which is done along with our teams. We give you 1 hour to advise you on insights for industry selection, 10 discovery days with the companies that you have selected. So you would have 10 discovery days where we would work with you and getting meetings with the brands, sharing the information on their franchise model. And we dedicate 5 hours alone, on these discovery days. And this is followed by some complimentary events that we do. For example, I have a Chennai show, and because we have this session, I see a lot of you from South and Chennai. We have a big show which is coming up in Chennai Trade Center this Saturday and Sunday. We have more than 100 companies which are coming up in this event. I would recommend all of you who are in Chennai close by, who can visit in TN, should visit this show. And this would have 100 companies, and nearly 4,000 people are visiting this show in 2 days time frame. So all our registered investors get a complimentary invite to our shows, and while for everybody else that is paid. And then you also get a 1-year advisory session that you get from our teams, followed by 2 hours. And this is what we spend most of our time on. So while information on brand is something that we can all share with you, but structuring of the deal requires the hardest and that's the most sensitive, phase of deal making. That's where we put 2 hours with all of you. And when I say deal structure, I don't come and say I get you the cheapest deal or the most discounted deal. I come and tell you that I get you the deal which is the right deal and the right value for the money that you put and available in the market. And this is also followed by any kind of mediation which is required for reasons there is any conflict and you want us to participate in that, provided both the companies, you and the brand want us to mediate, we are more than happy to even do that. And lastly, any 10 top candidates who get registered from this webinar, they also get to have a one-to-one session with the me and also Gaurav, who's our chairman. So you can block that time with us. And having said that, I will also request friends, if you're looking at exploring, you still have not made up your mind, आपने decide नहीं किया करना चाहते हैं but आप सोच रहे हैं, I'll be more than happy to even discuss that. And I am putting also my WhatsApp number. You can WhatsApp to me in case you're looking at any call or a meeting. And at the same time, I will also request all of you to also fix time with my representatives. I see you from most of the cities that I see, which are put in the Q&A box. I have my regional, consultants and teams who work in these locations, and they understand the market. They understand what works in this market, so they can spend 45 minutes with you. So Prakashji, I've shared my details. Let us know, and we would be happy to connect with you for Udaipur. And Monu Ojaji, welcome. You're looking for something in Patna, which is low investment. We would definitely be able to work with you. We have our partner, Mr. Ranjit Chaudhary, who is working in that market for many, many years. And brother, he has been instrumental in getting many brands to the market. Jo Patna mein shayad brands exist bhi nahi karte the kabhi. These are the companies which, he has worked hard with our investors in bringing them. And so we would look forward, friends, to discussing with you. I will also say that we have a webinar which is happening in next 5 minutes, and you can copy the link in the chat box to join the link, which is Onexa is the company which you're launching. This is a car detailing company which is looking at partners all across India. So if you're keen to register yourself, please do that. And this is the fee, friends, that we take. This is a one-time registration fee of 30,000, which is valid for a period of 1 full year. So which means that you can take advisory as many opportunities that you want in that time frame. And there's a flat fee of 50,000 that comes to us only, once the business has been selected by you, signed by you. But this 30,000 ensures that I'm communicating, I am putting my time as an advisor with somebody who also respects my time. Because at Franchise India, like I mentioned, we have more than 1 lakh people who inquire for various businesses, but our team puts our, very precious man hours only on serious business buyers, where we select what is right for you. We give you insights, we facilitate all that for you. Until the time you select the business opportunity, we do the entire hand holding and we work with you on a day-to-day basis. So this is all we had for today, friends. I've also put the WhatsApp number. Feel free to reach out on these numbers. You can click on the link and register for the upcoming webinar. And I'd like to thank you all for being on this session today. And I'd like to thank you and wish you a great day ahead.